Back in June, I talked about what was happening in the Australian equities market. There was a time when the market was being heavily sold down on fears of an imminent US recession. At the time, I suggested that the near-term fear of US recession were perhaps a little too strong, and that fair value in the Australian equities market, the ASX 200, was 7,100 points. And that was remarkable because at that time, the market was trading 500 points or more lower than that number. Since that time, we've seen a significant recovery in the Australian equities market. So I thought I'd update my commentary on the fair value. Now, the US economy has certainly slowed, and this year we think that the US economy will grow at about 1.5%, and we think that'll decline to about 1% next year, but that's still positive growth, and positive growth is not recession. As we've said in other presentations, we look at the US economy and we gauge its health month by month with the publications of the Chicago Fed National Activity Indicator. And this was originally created by the National Bureau of Economic Research, which is the group that calls US recessions. And the most recent number for that, which was published last week, is that the US economy is just a fraction below trend growth rate, which is pretty good, but it also shows that it's well above the level of minus 0.7 of a standard error, which is the signal in that model or in that indicator for US recession. And that's consistent. That growth just below trend is consistent with our view of 1.5% growth rate in the US economy this year. Now, the Australian economy is doing much better because we have a commodities boom, and the RBA thinks that the Australian economy will grow twice as fast as the US economy this year, in fact 3.3%. So what's been happening is in the last couple of months, profits have been improving slightly, and as a result of that, our model for the ASX 200 has moved slightly up, and that's in spite of the fact that bond yields have still remained at around about the same level that they were 2 months ago. So a fair value for the ASX 200 is now just a shade under 7,200 points, 7,199. Okay, let's call it 7,200. And the market is slightly lower than that. So we think that fair value now is, as we say, 7,200. But we're moving into a period which is, in seasonal terms, the weakest month of the year, and that is September. And the reason that the equities market tends to be weak, particularly in the last couple of weeks of September, is September when the US equities market tends to sell off, because that's when corporate tax payments are being made. It's about the only month in which the US makes a budget surplus on a monthly basis, because there's more money flowing in taxes than they can spend. So this tends to drain liquidity out of the equities market as companies pay taxes at the end of September, and that generates a sell-off. So we think there could be some weakness just in the last couple of weeks in September, followed by a stronger period in the final quarter. But the Australian market is pretty healthy, and the Australian economy is pretty strong. We have a very high level of commodity prices and a very high terms of trade, and that's generating stronger growth in the Australian economy, and pretty reasonable times ahead.